Today, we're going to take a closer look at 4 stocks on my watch list for potential buys this week. These 4 stocks are all in a growing market, and the first 2 we're going to take a closer look at, I do believe, are less risky. The second 2, I do believe, come with a lot more risk, but obviously a lot more reward potential. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, so the first is actually not an individual stock, but it is an ETF, and you guys know how much I love the semiconductor market. This is going to be Invesco's PHLX Semiconductor ETF, ticker SOXQ. This is actually becoming my favorite semiconductor ETF the more I read about it. And I do believe the semiconductor market as a whole has huge growth potential, as there have been numerous scares in this market with the overall chip shortage, with the overall chip glut, overall inventory correction, consumer demand, and also just everything from trade tensions that we're seeing globally. One of my favorite things about this ETF in the semiconductor market, it really has a very low expense ratio of 0.19%, not even 20%. The other thing is the number of holdings, only 30 holdings. And if you guys have been following me, you guys know that when I look at ETF, I really like to look at those heavily concentrated ETF, especially when their top 10 holdings hold a nice weight. If we take a closer look, their number 1 holding is Texas Instrument with roughly 8.8% of the total fund. Texas Instrument is one of those boring semiconductor companies, but it does have great returns, and I'm super happy to have this as number 1. Number 2 comes with a growing stock, NVDA, with roughly 8% of the market. We also see Broadcom, Qualcomm, and number 5, AMD, with roughly 6.5%. So I'm super excited that their top 5 holdings come with growing companies like NVIDIA, like Qualcomm, like AMD, all that I owned, and also comes with maybe some more value play like Texas Instrument and Broadcom, for example. Also, if you enjoy the semiconductor market, make sure to check out my number 1 semiconductor podcast in the world. Well, that's the goal. I just started. First episode was recently released. The link is down on the description, and I have a great host with me talking everything about the semiconductor market. The second company we're going to take a closer look at is a tech giant. This is Microsoft, ticker MSFT. So while Microsoft hits numerous markets like the productivity, enterprise, the consumer market, one of my favorite things is the clouding market, which now makes up roughly 40% of total revenue. In their most recent quarter, that was up 20% year over year. Main reason is their Azure platform was up 35% or 42% on a constant currency basis. Some pretty cool information. If we take a closer look at the cloud infrastructure service market, Microsoft is the number 2 market leader here with 21% market share, with source from Synergy Research Group. I do believe the clouding market is super important, especially for Microsoft. More importantly, they also have the huge strength in the gaming market right now. We can see in their most recent quarter, the Xbox hardware revenue grew 13%. We are seeing huge advancements from companies like AMD to provide more chips for companies like Microsoft for their Xbox. I do believe this holiday season will be another strong holiday season, especially in the gaming side for Microsoft. So overall, I'm super excited for their clouding market, but also super excited for their gaming market. If you are enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. And if you haven't yet, don't forget to subscribe to the upcoming number 1 semiconductor investing podcast in the world. The link is down below. Now, the next 2 stocks I'm going to mention are a little bit more risky, a little bit more, I want to say, controversial. Some people might definitely hate these stocks. First one is going to be Unity Software, ticker U. Right now, it has a market cap of $7.4 billion. In my opinion, with all the solutions this company has, this should be a market cap of at least $10 billion or more. So for me, this is a great buying opportunity, one I'm definitely thinking of adding this week. For those not familiar with Unity, this is the leading platform for real-time 3D creation. They're used for everything from games, digital twins, automotive, manufacturing, film, animation, architecture, government, and aerospace, and the solutions go on and on. There are some great news. On November 7th, today, Unity completed their acquisition or merger of IronSource, and now they are going to be becoming like the strongest 3D content platform, but also a strong advertisement and user acquisition platform as well. The company in their most recent quarter 3 is expected to grow 10 to 17%, and for the full year of 2022, 17 to 22. Obviously, numerous macroeconomic headwinds have affected companies, especially ones that deal in the advertisement space like Unity, so that's definitely a red flag. I do want to say the company is expected to report earnings on November 9th, so in the upcoming 2 days. I usually purchase on Thursday or Friday, depending on my view on earnings will determine if I purchase at the end of the week. Another red flag for Unity is they have increased their overall kind of long-term debt dramatically. It's almost a 1-to-1 ratio on cash and short-term investments. So that's a bit scary, especially for a growing company that continues to make acquisition and that continues to kind of see headwinds in their space. Regardless, I do believe Unity has the strength to be a market leader in this space. The final one is Meta Platform. Again, very controversial. Today, the stock is actually up 6% as I am recording today's episode. Meta Platforms, right, they deal with the advertisement, and we can see advertisement has definitely seen a slowdown. In my opinion, though, I do believe this advertisement headwind is going to be more short-term lived. In the long term, there's still a huge bullish thesis for the advertisement world. Their overall capital expenditures have increased dramatically that have affected this company's free cash flow. We can see how it has just been destroyed year over year, quarter over quarter, where pretty much this most recent quarter, it was roughly 173 million in free cash flow compared to about 10 billion last year. There are numerous reasons why I'm super bullish in Meta Platforms. First, their click-to-message ads. This is one of their fastest growing ad products with a $9 billion annual run rate. This revenue is mostly on click-to-messenger today, since that's where they started first, but they are working on click-to-WhatsApp, which just passed the $1.5 billion run rate, growing more than 80% year over year. They're also adding Reel ads. Instagram Reel ads have crossed 1 billion annual revenue in quarter 2. Both Instagram and Facebook Reels have a combined run rate of $3 billion in quarter 3. In quarter 3, the earnings, they also mentioned that they believe they are regaining market share from TikTok. Some other solutions that have huge growth potential for Meta Platforms is the Metaverse. They recently announced strong partnerships with Microsoft, Office, Adobe, Autodesk, Zoom, and Accenture, and more. And I do believe they are going to be bringing more of the enterprise market here to the Metaverse, which is super smart. Obviously, the gaming and social has huge potential, and they're also working very hard on the augmented reality front, which they haven't really discussed much, but they do give us a bit of an insight during their earnings call. Finally, the artificial intelligence AI discovery engine is playing an increasingly important role across all their products. The advances enable them to recommend more interesting content that used to be primarily driven just by the people and accounts you follow, but now it'll be driven by artificial intelligence. This is overall going to help increase retention rate, consumer experience, which overall is going to help with their advertisement solutions. Meta Platforms definitely has some numerous headwinds. They do have talks of layoffs happening this week. Maybe that's why the stock price is up, because it is going to help obviously the financials of Meta Platforms in the business side. Obviously in the personal world, that's pretty scary, thinking about losing your job. The other thing that's bullish about Meta Platform is they do have a very healthy balance sheet, plenty of cash, and very low long-term debt compared to cash. So these are the 4 stocks on my watch list for potential buys. Let me know in the comments below some of the ones you're thinking. Also, if you want to learn a little bit more about stocks in the data center market, make sure to check out this video above.